Stock market's going to keep rolling. The Fed won't cut interest rates until Q4. Real estate will still keep going up and get more unaffordable this year, and Bitcoin's going to go past 100K.
I agree with you on two of those points.
How ridiculous does Stranger's fit look right now, to be honest with you?
I think I look pretty good. What's the problem?
I mean, the camo pants, the sweater in here, and then the Stacker News hat, dude. Stranger's always coming fitted.
You have to make fashion statements.
Yeah,
it's good to be unassuming is what it is, right?
Yeah, of course.
Nobody expects anything from you when you look like a homeless person doing a podcast.
Yeah, of
to
course.
talk about macroeconomics.
That's very
and
true.
the state of Bitcoin today. So here we are. We're back. Glad to have you back.
Yeah, man. Thanks for having me back. What is this, episode number 3 with us here on the Pedicab?
It's number 3, yeah. This is our 3rd episode.
There
back
we go.
at it. Well, I'm excited.
Yeah, dude.
Super pumped.
I'm fucking jacked up today. So
like
let's
a
get
home.
at it.
Yeah, it's skyrocketing.
Yeah,
the price is mooning.
It's what is it right now? I don't know if you want to check.
I think we're at the 70s. I think we hit 70, but
yeah, we had a little dip last night. I think while we were at the bar.
I mean, I just came and said hi because I was pedicabbing and you shouldn't drink and drive.
Yeah,
but
I was drinking.
Yeah,
you drank a Red Bull. I
drank a Red
saw
Bull.
it.
Yes, I drank a Red Bull.
Yeah.
But yeah, we were talking about price. We were talking about the macro backdrop and how this is. I think this is a very interesting. It's a very interesting time to be alive right now.
Oh, 1,000%.
I've been noticing some parallels. I was making jokes of it. Like people were asking me, "How's South? They must be like really killing it and crushing it." I'm like, well. No, because the only people who have any money are in this room right now.
Really? Okay. So you think South by is kind of dying? Because I think last year when I came here, South by seemed more dead than it is this year.
No, it's actually the opposite. There's dude, so back in the day, with South by, you used to have music shows and venues all over the east side of Austin.
Yeah,
you had shows all the time. Now it's just basically a regular weekend.
Yeah.
Every day is Friday.
Well, I don't know. Maybe it's just because, I saw it on the internet. But, I mean, I saw, I don't know, Alex Cooper, Alex Earl, those, TikTok, kind of bigger stars here this week, where I don't think I've seen that, I don't know, star caliber in Austin during South by since pre-COVID.
Dude, the bars are barely even packed in a lot of these places.
Oh, yeah. I mean, I walked here on 6th Street, and it was dead. I mean, there was, of course, the people's outside the bar, but nothing for what you would expect on a South by, Friday afternoon.
But the stock market is at an all-time high.
Of course. Yeah, I mean, that's the delusion in the market. I'm sure we'll dive into this a lot more, but, I made 4 basically macro predictions this year. Stock market's going to keep rolling. The Fed won't cut interest rates until Q4. Real estate will still keep going up and get more unaffordable this year, and Bitcoin's going to go past 100K.
I agree with you on 2 of those points.
Okay.
I even agree with you on 3 of them, but I definitely agree with you on 2. 1 is up in the air.
All right. Which 2 are you? Do you agree with me on?
The cutting in Q4.
Yeah.
And the housing.
Yeah.
But I don't think stocks are gonna keep ripping.
So in my eyes, I think stocks are going to keep ripping because, if you look at it in 2023, right, the entire stock market last year was up more than 2020 when we printed 40% of the money supply.
Sure.
So, if you look at it that way, the stock market's always been delusional. 23 was not a great year. Inflation was ripping, right? We had inflation keep rolling.
No, so let me stop you on this.
All right.
Okay. So in 2023, at the start of 2023, what was the macro narrative about the stock market?
I think it was it was going to go down still.
Yeah, everyone said, hey, it's going to go down. And what did the market do when the entire retail crowd said, hey, we're about to crash, the market's going to go down.
Yeah.
Bitcoin's going to 5K or 12K or whatever.
Yeah.
What happened?
Yeah, it kept ripping.
The opposite happened.
Of course.
Okay? What are people saying now?
Well, they're saying that the market is fine. Oh, okay. So it depends who you ask, because I think we were talking about this last night. It's if you ask a Bitcoiner right now and they're looking at all the macro signals, right? They're looking at, consumer spending. It's it's still up, But
it's dropping. It's dropping.
Yeah, it's dropping.
Jobs are dropping.
Jobs are dropping.
Inflation's trending back upwards.
Yeah, and credit card debt is going higher and personal savings is going lower. So if you look at all those macro factors, it would make sense that the stock market would start to go down. The thing is the reason that we're like, Bitcoiners and we kind of look at all these things is because the market never actually makes sense. It's always been delusional.
Yeah, that's why it's at an all-time high. That's why the market being at an all-time high right now doesn't make sense. And when things don't make sense and they're delusional for a long enough period of time, that delusionment is obvious, eventually you get steep corrections. And we haven't had a steep correction yet, so it makes more sense to predict the market going down with where we are than going up from where we are at these current levels.
But we're in an election year. That's the one caveat here, I think. It's every single time we're in an election year, the stock market goes up. And what I think is going to happen, which would make sense here, is that, all right, so say Trump gets elected in this upcoming election, or a Republican, whatever, changes parties, the stock market crashes, the narrative then turns to Trump crashed the market. I mean, that's exactly how I think this is going to play out.
I actually agree with that. And it also ties into why they're going to cut in Q4, because generally speaking, I'm no financial expert, and this is not financial advice. I'm just a guy who rides a tricycle with his friend talking about macroeconomics, and the state of Bitcoin and everything else. But generally speaking, the market performs the best right before, during a pausing period, in the anticipation of a cutting cycle.
Yeah.
And once they start cutting, the markets usually start plummeting because, especially with how inflation is trending and how everything is going, if they start cutting right now, especially if inflation is ticking up, that is a really bad sign for the entire economy as a whole, and then the reverberations of that will be felt across the board in a way that we may not understand or see right now or fathom.
Yeah, 100%, and that's where I think it's gonna go. Right? It's like the Fed is, it's run by humans, right? So if you think about it, right, the narrative is Powell raised interest rates way too quickly. He broke some things, right? He did that to try to get his Volcker moment. So, he's a human at the end of the day. He wants to keep his job. He wants to stay in power. So he's going to keep interest rates higher for longer. That's always been the narrative.
Sure.
And the fucking market's been calling for cuts since last year, which hasn't happened. So I think we're one of the too few people that you'll hear about this stuff that says that they're not going to cut until later, because the market's calling for a cut in May right now, which is what? We're recording this March 15th?
Yeah, March 15th.
Yeah, so
there's not going to be a cut in May.
No, there's not going to be a cut in May. And then now, CNN, I saw them.
They're not going to hike. They won't hike, but it's going to stay the same.
It's going to stay the same, 100%. CNN already put out a feeler the cutting might not occur until 2025. So the mainstream media is already starting to turn it a little bit. And soon the narrative is going to be, okay, there's not going to be a cut until 25. If they cut this year, it's not going to be until Q4. I could see a maximum of 3 cuts if they do it.
Brandon, what do you think is going to happen to regular people's employment and the state of small businesses if they have to continue functioning under 5.25 rates for much longer?
I mean, I think that small businesses, if they've made it this far already, they'll be fine, to be honest. I think that if things start to cut, that's when, shit's going to get a little crazy, and then we're going to see the crash. I think the interest rates right now aren't going to kill too many small businesses that weren't already going to die anyway.
Okay, that's fair.
And I think that, when the market turns is when it's going to be cutting, and then money will get easier to come by, but more people will be applying for it. It'll be harder competition still. And, that's when shit's going to get wonky, too.
Yes, but also with higher interest rates for longer, maybe some of these businesses are not going to go under because they've already made it this far and they've adapted and figured stuff out. But you're still going to have to cut costs. You're still going to not hire new employees. There's still going to be a tighter competition, and there's still going to be the threat of automation. And the people who do work for these businesses, especially in the tech sector, because a lot of tech jobs are inherently useless.
Oh yeah, of course.
A lot of those people are either A, going to be out of jobs, or B, are going to be so worried about being out of jobs that they're not going to spend as much, and the rest of the broader economy might start, I don't know, at the very least, grind to a standstill, or start slowing down tremendously. When that happens, if you're a small business owner, less people are buying your products. You have these higher rates that you're dealing with. You're still dealing with inflation going up. I think that it actually is going to be. I actually think that you're going to see some trouble looming in the small business community if you keep these rates up for too much longer. And so what I'm trying to say is that once the cutting does start, everything that I'm talking about is going to kind of be a lot more realized to the general public, and it's going to spook markets and people who own investable assets to a pretty substantial degree.
Yeah, I mean,
that's my view on that. Right?
Yeah, I mean, it's like the way I view it too is like with small regional banks and small businesses are kind of like in the same boat here, right? It's like if you're a small business or if you're a small regional bank with these higher interest rates, you're gonna have to take a little bit more risk. You don't have as much regulation as like the big dogs do, so you're allowed to take a little bit more risk when you're a small to medium-sized bank. And, you know, with the higher elevated interest rates, it put a damper on some of them. Obviously, you know, Silicon Valley Bank, a lot of these other places, they were very stupid with the way they managed their risk. But, I mean, to be a bank, to kind of blow up and become successful, you maybe got to take a little bit of those risks. So small businesses, same kind of deal, right? But, I mean, if you think about it, like we're at what? Like Mighty Fine's a huge burger place here.
Yeah.
It's not a chain, but they charge more than McDonald's does for a burger. Okay, granted, maybe it's an inch or so thicker, but like Mighty Fine could never get the amount of prices that a McDonald's gets for their prices of meat because McDonald's is ordering in bulk.
Well, no, it's because they don't have real meat.
Well, that too, but I mean, at the end of the day, it's like that's how all small businesses have to operate, right? I mean, they have lower margins. Or they have the same margins that everything's more expensive, and then people want everything for cheaper. So over time, the way that this inflationary process works is it's just going to encourage the big dogs to swallow up all the small businesses. And that's kind of the way that it's working with regional banks too, is like, you know, we're getting to the Canadian model where we're going to have like 5 or 6 big giant banks, and then there's going to be no regional banking system. And then everything's going to be fucked in the overall like fiat system that we live in. Granted, that's going to take a long time.
That's going to take a long time, and that also only happens if people take their money out of smaller banks. If people decide, hey, I'm going to invest in a community bank, that's still going to be viable. And the rules for community banks are the same as for big banks, I believe.
No. Well, so like the big banks like have to be more conservative with the money that they're holding, basically.
No, but what I mean though is that like you still get the same FDIC insurance for $250,000. Like, if I start doing really well in life and I'm able to just put $100K into a bank in the town that I live, and that bank goes under, I still get my $100K back from the government because it's under the $250K allotment.
Yeah.
So if more people just decide, hey, I'm going to put under $200K in small banks and just create accounts of small banks, so you could actually potentially prevent that from happening.
You have a lot of faith in the average person. I think that.
Well, I said if.
Yeah.
Based on how I interact with people on the street, and based on how I do some of my street interviews, and also based on how I talk to some of my customers when I tell them that I offer 25% discounts for paying with Bitcoin.
Yeah.
My faith in actual human beings is not as high as I would like for it to be, but it's still good to convey a message of hope and optimism. Because maybe that could change.
Yeah, I mean, I'm very optimistic on the way that things are going to play out this year. I mean, I think
for myself, yeah.
Well, I mean, yeah, that I think for myself for the long-term future, right? Because I'm a Bitcoiner. But like, I think like this year, I think the delusion's going to live on. That's kind of like my.
Your base case?
Yeah, my base case for 24 is like delusion's going to live on. We won't see shit until 25. Maybe mid 25, late 25.
Which also kind of correlates with how bull markets operate and post-halving periods and stuff like that. And then you see
coincidentally, that's how it's going to line out. It's like everything is a coincidence, right? I mean, but at the end of the day,
news follows charts.
Yeah.
News always follows charts. But here's the thing, too, right? There's a guy I follow on Twitter, and it's just for technical analysis perspectives and a differing point of view. A guy named Blockchain Backer who gives these pretty like in-depth TA analysis of things, right? And one of the things that he's illustrated is that Bitcoin right now has hit like an actual full when it hit like 72K, it hit an actual full 4.236 extension on like a Fibonacci levels from the last all-time high. And you don't pass those levels. Like you always get a big drop off from those levels. And I think from a risk management standpoint, when gold is skyrocketing, when inflation is trending upwards, when inflation's trending upwards and employment numbers are trending downwards, and faith in the economy and consumer spending is trending downwards, and people taking out new credit cards is trending upwards, and a debt that's unserviceable is also that actually could be good for Bitcoin. But when those factors are trending the way that they're trending, and then you have a lot of people are buying Bitcoin through the ETFs. These are regular traditional finance holders. These aren't like all of a sudden these aren't like newly orange-pilled people. These are just people just buying things as a finance vehicle.
Yeah.
Well, okay, what happens when the first sign of trouble starts brewing in markets? What are they going to be selling? They're not going to sell their Apple. They're not going to sell their Microsoft. They're not going to sell gold. They're going to be probably selling off their Bitcoin. And I think as a result of that, you're going to see some very, very large corrections on the way to 100K or higher is what I think.
Yeah, I mean, the volatility is going to increase because there's more money being dumped in. But I mean, at this point, there's no question that Bitcoin's going to have to go up in price, like from the dollar amount. So if you look at the three main factors, right? I mean, there's 11 spot ETFs that got passed in the U.S. alone. There's, the halving coming up. So if you equate the halving to, a price action, I don't really do that anymore because there's less than 10% of the total supply that needs to be left to be mined. So I don't think 10% is going to basically correlate with, 100% of the market
But it will,
price.
but fees, right? So like if you're a miner, but
okay.
if you're a miner, I'm just hypothetically, because I don't know shit, right? I drive tricycle for a living, and this is not financial advice. So I'm just
I know,
speculating.
me neither.
And I could be wrong on this, but if you're a miner, right, and the halving happens, it's going to cost you more to mine each Bitcoin, right? Like you're gonna pay higher costs, to produce the same thing.
So right now, 900 Bitcoin are mined every single day, every single day, and that's gonna be cut to 450 in a month in April. And so
the cost of mining is gonna go up a lot higher.
Yeah, and in one day alone, on Wednesday, March, I don't know, maybe it was an 11th, it was maybe a week ago, March 4th or something like that. 10,000 Bitcoin were bought in one single day from the ETFs alone.
But was it BlackRock buying the ETF, or was it regular retail customers buying Bitcoin through those ETFs?
It was retail customers, or it was either BlackRock, or it might not have been retail, but it was BlackRock and all the ETFs saw 10,000 Bitcoin inflows, which is multiple billions of dollars inflowed into the spot ETFs.
Okay,
so it's the amount of supply. 10,000 were bought in that one single day, and 900 were new supply was put out.
Yes. But we're talking about the halving and why this is good too.
Yeah, I think the halving is just more natural.
Right, but it's also going to cost more for the miners to produce Bitcoin, and as a result of it costing more to produce, you're going to want to sell it for a higher price.
Yeah, and of course, the amount of the amount of energy needed to mine a Bitcoin is going to go up, right? All these little intricates that are built into the Bitcoin system.
And why it's a really good long-term savings vehicle, and you should ignore the price if you just invest a little.
Yeah,
every week. Yes.
nobody's lost money in Bitcoin that's held it for longer than I think 5 years. This is something Michael Saylor always says. So I don't know. Obviously, it's not financial advice, but if you hold on to Bitcoin, no matter what, look. Right, 4 years ago we hit 69,000. That was the all-time high. In 2020?
Yeah,
or maybe it was 21.
21, yeah.
Yeah. No, right now, if you held Bitcoin and you bought it at the exact top, you'd be above.
You're still in profit, yeah.
Yeah, you're in profit now. All you had to do was just hold it, which is very difficult to do sometimes, to be honest.
Yes.
When you see it go from 69 to what it fell down to, 17 or something?
15 something, yeah.
Yeah. So all right, you have to have some nuts on you, and you have to believe in what you're buying. But I think that's
or you just have to be really disciplined and just say, hey, a little bit every week, no matter what the price. Put a little bit more if it gets to a certain target, then you just put a little bit. You make a bulk order because things are on sale.
Yeah. And so I think that's just kind of the reality of Bitcoin and the number go up technology. But I think out of all the things I lined out already, BlackRock and all these spot ETFs are just fucking buying like crazy.
Oh, here's another bullish catalyst, Brandon.
Yeah, what?
And they changed the FASB rules.
What's the FASB rule?
The Financial Account Services Bureau rules, where companies can now report that they have Bitcoin on their balance sheets. And this was a year ago.
That was big about Saylor, right? Saylor kind of was. Well, them and MicroStrategy, that was kind of the big spearhead behind it, right? Because they've been holding a bunch of Bitcoin on their balance sheet for a while.
But now companies can there's a lot less regulatory loopholes that companies can do to start buying and accumulating Bitcoin. And so what you could see happening is you could see companies dumping shares of stock and then using the profits from the stock to just accumulate more Bitcoin. And then they make an
yeah.
announcement at the end of the quarter, they, like right before their earnings date or on earnings. Oh, it turns out that Apple has been purchasing Bitcoin for the past year or so, and this is a new asset that's on their balance sheet. Okay, Bitcoin now goes up as a result of the announcement, and the stock price of Apple also goes up as well. And so it provides an opportunity for large companies to continue growing their profits at record rates and using Bitcoin as a vehicle to do that. And so that could actually be a huge catalyst to driving the price up to, well, look, I think like price predictions are semi-baked in, and you shouldn't predict the price. It's like a vehicle for improving your position in life, right? And news always kind of like follows charts. But if you like say, hey, Bitcoin's going to 200K or 150, like there's always a catalyst to get it there. And I think it's always good to envision what you think those catalysts will be before they happen.
Yeah, and I mean, okay, like at the beginning of this year, to be honest, like at January, I don't know, we could look at the price what it was then, but it was like maybe 20 or 30 or something like that.
23, right?
Yeah, no, of this year, of 24. Like what? Like a couple months ago.
No, well, in January 24 it was in the 40s. It was like low 40s.
Okay,
it
so
closed at like 40 something. Yeah.
Okay, so low 40s right now, and we passed 70. So we almost went up.
Almost doubled, yeah.
Yeah, almost doubled in like 3 months. If you look at the previous history of Bitcoin, every single time it's passed the all-time high, like it's been 18 days to double, like the last time it happened, 18 days the time before that, and like the longest it took for the price to double, basically after it hit the all-time high at that point in time, like came back down and went through the bear market, was less than 3 months.
Okay, and in those 3 months, did you get a 20% correction before it doubled? Like, did it hit the, you know what I mean? Like that, those are catalysts to think about, right?
Yeah, I don't know about all that, but I mean, like, this is also the first time that an all-time high is hit before the halving too.
You know that in November of 20, yes, that's another
yeah, I mean, so it's just like it's all these like factors building up.
Well,
where it's like I might be like at the beginning of this year, I was like, I don't know if it's actually going to hit 100K. I might have been bearish for like making that prediction of just 100K, but I made a bet. So I mean, like my bet was that. I bet this guy, Julian, Kinetic Finance, that we'd have to eat like 2 ghost peppers if it didn't get to... I'd have to eat 2 ghost peppers if it didn't hit 100K, and he'd have to eat them if it did. So I'm hoping that, by Bitcoin Nashville in July, that I can just make him eat like ghost peppers and then go to...
You should film that.
Hattie B. Oh, yeah, 100%. We're going to film that, go to Hattie B's, maybe make him eat the hottest chicken there. So,
I love that. That's amazing, dude. That's amazing.
Yeah. So I'm hoping by then, but we'll see. I mean, I don't know. I'm very optimistic on Bitcoin specifically this year. And then like too, you're like, all right, so we see these cycles and we're talking about a crash of next year. Like, I mean, it's gonna like, what do you think the narrative is gonna be in the crash when it happens next year? If I'm right and it happens next year, right? The 2 catalysts are gonna be Trump got elected and he fucking tanked the market, and the next one's gonna be Bitcoin. And they're already kind of pointing the fingers at Bitcoin spot ETF because I think
they're going to try to blame Bitcoin for that.
Well, I think Jamie Dimon and like JP Morgan came out and said that Bitcoin, like the Fed is going to hold off cutting rates later because of this recent Bitcoin bull run.
I don't know about that, man, but I think that...
I mean, it doesn't make sense.
Here's what I think is going to be the catalyst. Do you think... you're gonna get another once the new all-time highs get hit. We're not talking about this all-time high. This is an all-time high for ants, right? But like we're like the new all-time high, right? Like the parabolic stage after that. Do you think there's gonna be an 80% drawdown or a 70% drawdown or whatever it is, like from when it hits the parabolic phase in 2025?
I mean, I think if you look at it right,
because I think yes.
Yeah, I mean, so like, all right, so Bitcoin this past time went below 17K, which was a previous all-time high.
About a little under 80%.
Yeah, which was a big drawdown. I think like that's probably going to happen again, right? So I mean like 69K, we see the run up. I wouldn't be surprised if we see it dip to like 60 the next bear market, whenever that is.
Yeah, 60, 50, 70 in that range. Yes. Yeah.
Like it just kind of draws back down, and then everybody's like, oh, Bitcoin's dead again. And it's like, well, we just went through the same shit like 4 years ago where it was at like 17K, and then everybody's going to be like, oh, MicroStrategy is going to go under. Like it's going to be the same repeat cycle.
Same reoccurring cycle. Or any of these companies will go under.
Yeah, I mean, it's a 4-year cycle.
Apple's going to go under because they're buying a bunch of Bitcoin. Tesla started buying Bitcoin again.
Yeah.
Yeah, I'm like, you'll see the same news narrative. And I think that the Bitcoin crash could potentially be correlating with like stock market crashes, and it can go kind of a little bit more hand in hand with each other. What I think is going to cause that drawdown actually, and this is just a hypothesis, is the cutting size. Once they start cutting.
Oh yeah.
Once the
100%.
once the macroeconomic numbers are too glaringly bad to ignore, and then they have to start cutting, you'll see a huge drop off in assets. And if you have $200,000 Bitcoin, yeah, then you'll start to see the 80% drawdown full of like hopium at any time it like makes a small dead count bounce rally or something like that, and you'll see that for like another year. You'll get laughed at again. You'll spend a year and a half being laughed at by all your friends, but hopefully by then you've made enough life improvements where it's okay. You just like be quiet and turn the noise off and just continue with the same strategy, putting the blinders on and doing what you got to do and ignoring all the bullshit around you. But I think that is going to be a catalyst. I used to think that like a cyber attack or something catastrophic would be something that could bring it down too.
I think that's the next. The way I view, we can get into, I don't know, the Russia-Ukraine kind of war, like,
or Israel-Palestine too, with Iran.
Well, yeah,
everything.
It's all that.
All of it, yeah.
I think all of this is connected, right? So what I think is going on, which is kind of like, it's not the Cold War necessarily, but it's Russia and the BRICS countries are pulling the energy cog, right? They see that the U.S. did a bunch of stupid policies, a bunch of green energy policies that didn't allow the U.S. to be self-sufficient, so we needed to import oil, import all these things. And then what did the U.S. do? They pulled the monetary policy kind of string, right? So the U.S. has the monetary policy string, which is pissed out a lot of people, and then the BRICS countries are pulling the energy string. So I think like that's going to kind of keep coming to collide. I don't think we're going to see the end of the dollar anytime soon because, like I said, lined out with the delusion of the market. I know I'm a Bitcoin guy, and I think eventually we'll get to that kind of standard. But I think like the powers that be don't want to like take away the power, right? Like, or don't want to give away the power that easily.
Well, it's like living in Brooklyn. You got the nicest apartment in the Marcy projects.
Yeah,
yeah, that's what it is. Like that's kind of what it is.
Yeah, and that's how the U.S. is able to maintain the power right now. Is like they got the monetary policy. But if you think about it, like at the end of the day, a lot of these things, like if you walk around the U.S. I don't know. I'm very bullish when it comes to like Latin America, like Africa, like these places that are severely underdeveloped. But if they get the right leadership in there, like you're seeing what's going on in El Salvador, they get the right leadership in there, and then they go on to a Bitcoin standard. Like they have basically a blank canvas to play with. The U.S., like we're here in Austin, right? I guess like they're doing something with
Austin is supposed to be the Bitcoin capital of Texas and possibly the Bitcoin capital of the South.
Yeah, but
nobody like even understands what this thing is. Like no restaurants, like very few restaurants accept Bitcoin, right? Very few customers want to pay with Bitcoin. They don't even like want to buy Bitcoin on Cash App and try to send it to me, knowing that they're gonna pay like $10 or $15 less for the ride that I'm charging them for.
Yeah. Oh, it's stupidity. But if you look at it too, it's like, all right, like Austin is not a blank canvas to play with either. Right? Like you look like the Frank Irwin Center, that used to be where UT played all their basketball games when I was growing up. They're tearing that apart. They didn't demolish it. They're just taking off the outside and like redoing it to make it some sort of like hospital arm of like the UT's like medical school.
Yeah.
So but if you look at it, I drove by it this morning. It's all rusty and like all the like bones of it are not very good or very solid. But you go to like, I don't know, like you go to like the olden times, right? This is getting like really into the weeds of things. But if you go to like Europe, right? You go to Rome, like a lot of those buildings that were created in the ancient times are still around because they focused on structure. The buildings are very beautiful and immaculate. Like the architecture is just so much better. And then here it's like, all right, well, we have this thing. Like, let's just kind of fix it up to make it what we need it to look like. Make it a box, like make it try to look sleek that way. Use cheaper materials. That's the kind of the way that we're going here in the U.S. is it's, the inflation's not only killing like, the food processes, which we kind of like joked about earlier.
They're putting puberty blockers in the Cheerios, Brandon.
Yeah,
there was an article in the New York Post. They are putting puberty blockers and stimulants in breakfast cereals that they give to children.
Yeah. Well, the water's making the frogs gay too, right?
Well, yes. I mean, yes.
Yeah.
Like it sounds.
I know
crazy.
Alex
Yes.
Jones was right.
Robert
I mean,
Kennedy
yeah,
was right.
yeah.
They've done PBS specials and done numerous scientific papers, like cited in Google Scholar, specifying that exact same thing. It's not a crazy conspiracy theory. That's just a true statement.
Well, no, I know. I mean, I
Like-
said it tongue in cheek, but I mean, it is true.
It is a
I
true
mean,
statement, and
yeah.
they're making human-animal hybrid chimeras, and they're doing all that stuff. And this is probably why certain people who are like in this community don't really want to go on my show, because me, it when you say stuff like that, even though it's true, it kind of decreases the reputability of what certain people are trying to do. But the fact of the matter is, when you're dealing with like rampant inflation and rampant currency debasement, you got to get labor and you got to get things done as cheaply as possible to mask inflation.
1,000%.
And slave labor and degrading the quality of goods is how you do it. And like, look, man, humans have rights and animals have rights, but animal hybrids don't, right? And so you could see like weird shit like that potentially happening to mask the effects of where we're headed. I don't think that's like an unreasonable thing to talk about in passing.
No, I mean 100%. I mean, like, look, like if you guys haven't listened to it, you should listen to Texas Slim and his rant about it. I mean, like, basically, right now with cattle, right? They inject all the cattle with a bunch of antibiotics and a bunch of bullshit. They keep them in, a 2x2 kind of like box where they're all stressed out and they can't really like roam free like an animal's supposed to do. And like, because of all that, then you're consuming all that meat, right? And then so what's the narrative? It's like, oh, this red meat like kills you. Red meat gives you a heart attack. Like all these like little things. It's
If
like,
you eat that kind of red meat, it does.
Yeah.
But just go to a rancher and buy it straight from the source.
well, and have you looked at that study? It's like they just ask people like, do you eat red meat like on a daily or weekly basis? Like how often do you eat it? They don't ask you like where you're getting it from. So they don't ask you if it's McDonald's. They don't ask you if all these things. So it's like, all right, like if you go to a McDonald's right now and you go survey people like, hey, are you eating red meat? And like, all right, this burger is considered red meat. Like, yeah, I eat McDonald's twice a week. Like, fucking shit.
And you don't ask them what else they're eating.
Yeah.
You don't ask them, hey, what else are you eating? What else are your lifestyle? Like, what time? How many hours of sleep do you get? How much alcohol do you drink?
Yeah.
How many prescription medications are you on?
Are you exercising regularly?
Are you exercising?
Yeah.
How much sunlight are you exposed to? Like, you don't ask anything. You just say, are you eating meat? And they say yes. And the guy looks super fat and out of shape. They say, look, meat causes heart disease. Meat causes obesity.
Yeah.
It's
100%. And like that narrative is like so prevalent that, I mean, people still believe it. I mean, I'm not going to lie. I believed it for a while, like while I was in college. It was like, well, like, I like steak, but like chicken and rice, right? That's the healthy thing to do. And because that's more accessible, right? I mean,
they're both healthy.
Yeah, I mean,
Chicken is still healthy for you.
Yeah, it is. And I'm not saying it's not, right? But like steak is very healthy for you. I mean, it's like, at this point, I eat probably more red meat on a weekly basis than I eat like chicken.
Yeah.
And I'm probably the healthiest I've been.
Yes. I think the thing, though, is that you don't want to fall into the mistake of saying, I'm going to just eat red meat and go on a full carnivore diet and not do anything else, and you won't see the health effects. It's like, it's all collaborative, right? It's like, okay, I'm going to start eating more I'm going to start eating more lean protein and more red meat and more steaks and everything, right? But while I'm eating that now, because my brain is more optimized, because I have more testosterone, because I'm feeling a little better from eating that, now I have to do something else to expand on that, right? That's just not the only thing that you do. And I think a lot of people make the mistake of saying, oh, well, as long as I just like cut this thing out of my diet, I'm going to see noticeable health problems. Or if I add this to my diet, I'm going to see noticeable health improvements. Well, no, you just need to now do something else.
Yeah. No, I mean, it's all like, everything's connected, right? So, I mean, that's why when I look at the markets, I like to look at everything because everything is connected. It's same thing with your personal life, right? Like the amount of sleep you get, the amount of exercise, like what you're putting in there, like your amount of sunlight, like all those things are connected with your overall health. Same thing with the markets, right? I mean, interest rates, the stock market, real estate, Bitcoin, all that shit is connected. And like the geopolitical, like the underlying like energy stuff.
Well, how do you feel about the treasury auctions?
What do you mean?
Well, like, we're not passing treasury auctions or something like that, right? Like, you probably know about this more than I am, but aren't we like failing treasury? Like, what are the implications of the fact that people aren't buying our treasuries, or like other countries aren't buying up our treasuries, and the Fed is having to buy up our own treasuries?
Yeah, I mean, this is the first time that Japan's ever sold off U.S. treasuries ever. So, I mean, it's definitely alarming. But, I mean...
What does that mean? Because I actually... That's something I don't really understand.
Yeah, I mean, I think it just... To be honest, like, I'm not, like, an expert in any of this. So, to my understanding, what it means is it's basically just like weakening the dollar at a certain point, and it's like elevating the Japanese currency, which is like, if you kind of like look at the charts, the way that the Japanese, I think it's the Japanese yen or Yemen or something.
Yeah,
I don't know.
Japanese yen.
Yeah. So the Japanese yen against the U.S. dollar is actually doing pretty well comparatively to the other fiat currencies, and so that's probably a big reason why is that Japan's kind of like always been, all right, like we'll help you out, the U.S., but now they're kind of looking out for themselves. And I think that's going to be a continuing trend, is like a lot of countries are going to look at what El Salvador did, because like the U.S. is just being fucking dumbasses with the monetary policy. I mean, Jerome Powell's even going on 60 Minutes and saying that. I mean, how crazy is that we're having a Fed chair come out and say inflation and our monetary policy is killing younger generations? How insane is that he's saying that out loud?
Yeah, that it is kind of crazy. I mean, he also said a lot of the stuff in his testimony to Congress, which is, I listened to about half of it while right before South by, and he was saying a lot. He was saying a lot of similar stuff. Like, he's really good at talking for a long period of time without actually saying anything. He's like a master at it.
Well, I mean, that's all politicians.
No, but he's
right?
really good.
Yeah.
He is really good at it. He's like, we're trying to bring inflation down, and we also can't raise rates, and we're gonna have to keep things the way they are, and see what the data looks like, and based on what the data looks like going forward, we'll make our decisions. And so,
well, I mean,
he's so deliberately vague. And I think that his vagueness is actually another reason why markets are kind of not plummeting as a result.
Well, I mean, yeah, there's the problem with that is they're looking at backwards looking data, right? So they're looking at jobs reports that gets reported like every month. So it's looking at the jobs reports. The jobs reports that we'll see in March are looking at February. The CPI numbers that we get in March are looking at February. And it's like, okay, then they're going to make their decision to cut interest rates based on data that's a month old.
That's from the past, and no one's looking into the future and understanding that the effects of AI, the effects of tightening monetary policy, and the fact that consumer spending is going to be plummeting because people are on their fourth credit cards and filing for bankruptcy, and having to sell off their homes if they bought it at variable interest rates and not being able to pay rent. And you see all these videos circulating. Less people are going to spend money, and as a result of that, you're going to see more businesses going under, and you're going to see more people getting fired from jobs. And you're going to have to cut rates. But then if you do cut rates while we're $34 trillion in debt and nobody wants to buy our treasuries, you'll see inflation start spiking, and then you really get Pandora out of the box. And either way, you either get a depression or you get hyperinflation, which is arguably worse. So it is a really tough position to be in if you are someone like Jerome Powell. And before we go, because we only have like 2 minutes, right?
Okay.
But before we go, I feel like this is going to be a great segue for them to try to launch a central bank digital currency and mask this even further by saying, look, man, look at all the problems that everyone's facing based on what we just laid out. Everybody needs a livable wage. How else are you going to pay? People are going to be starving. They're going to be on the street. They're going to be homeless. They're not going to be able to get basic necessities. No one's going to get health care. They're going to use all the woke progressive language, and then they're going to try to figure out a way to offer universal income through a central bank digital currency and present any member of Congress or any human being that's against that as right-wing, a fascist, a Trump supporter, and they're going to try to really throw all these things at the board,
Yeah, I mean, I don't know. I don't agree with...
I don't think it's going to succeed, but...
I don't think the CBDC thing is going to happen in the U.S. because Powell has already kind of come out and said against that. And he's
unless an event occurs, like a cyber attack or a huge economic
course.
crash, which is literally on the horizon based on what we just talked about for 2025. Sorry for interrupting you.
No, that's fine. I mean, I mean, it's not out of the realm of possibilities, but I mean, they're already doing this in China. I just saw a clip of like Jordan Peterson kind of going off about it because like they have the social credit score, everything like that. They have cameras basically looking at you in China that make George Orwell's like 1984 or whatever it is, that book, look like just like a normal future because like they have cameras that will recognize your gait, they'll recognize your face, you have facial recognition, everything that you have right now is tied to that. You have a social credit score, and I mean, that's happening in China.
Yeah, and
I don't think it's going to happen in the U.S. anytime soon because, one, we have guns. Like, I mean...
Yeah, but you got to understand is we also have a lot of demoralization, and a lot of these people here who are on their fourth credit card that aren't making any money, that spent all their money, that are struggling to basically to pay their rent, and they think it's because of corporate greed and all this other stuff. I don't think these people actually care about having a social credit score. There's just a level of apathy and demoralization, and the need for convenience I think is outweighing the desire to protect individual liberty because of how degraded our culture has has become, and hopefully it's not too late. But that is a red flag of concern that I think people should be on the lookout for and be aware of, and hopefully try to shift for future generations.
Yeah. I mean, it's not out of the realm of possibilities. Like, I mean, the way that the U.S. is trending is not in the positive direction for sure. I mean, the cracks are definitely starting to surface. The overall reign of like the U.S. empire, I don't think is going to.
It's not gonna. We're not gonna make it. I don't think we're gonna make it. I think you're gonna get a shift.
Yeah, I mean, I think we're going to get a shift. I hope it becomes like more of a decentralized kind of way where it's like, all right, like, you know, it's more like countries are becoming more like, all right, digital nomads, like kind of aspect of things. Like, you know, you can go live wherever you want and kind of work. Companies are still going to be want to be based out of the U.S. because of the way that the policies are right now. But I think smaller countries like I said earlier, like you'll see El Salvador, like a lot of countries like that are seeing what the U.S. is doing, and they're going to make it more advantageous to have your company outside of, say, El Salvador, or outside of, or at, say, one of these other countries that, like maybe Argentina or some of these other countries that see the advantages. They're going to say, hey, we won't charge you any tax. Just come live here, have your base here, employ Argentinians, and then they're going to spend their money in Buenos Aires, like, you know, partying and whatever, and then that's going to help boost the overall economy of that country. I think that's where things are going, and I think the U.S. like is trending in the wrong direction because they're like, I mean, we have a bunch of idiots that are like, oh, like it's a corporate greed, like let's tax the rich more. Like, no, I mean, that's the most anti-American thing ever. Like, why did America first break off from England?
No, yes.
Taxation without representation.
You also have idiots in the conservative movement who talk about being censored and canceled and don't want to buy any Bitcoin, and they're equal idiots because they're not helping the situation.
I mean, it's not just one side of the things. Like we're surrounded
Brandon,
by a lot of fucking
we have
idiots.
to learn Spanish. That's what I have.
I'm taking Spanish lessons now. So
I need Rosetta Stone. But anyway, how do we get a hold of you?
All right, you can check me out on Twitter or Instagram or TikTok, Green Candle IT, and then my YouTube Green Candle podcast, State of Bitcoin, and Macro Insights if you want to get my macro stuff too.
Excited, always a pleasure.
Yes, sir.
Always a pleasure. It's been a blast. Hopefully, my not financial advice once again.
Yeah, not financial advice.
All right.